Hello, good afternoon, everyone, and welcome to this webinar on mortgage portfolio standards, an innovative approach to decarbonise buildings. My name is Sonia van Rensen. I'm editor-in-chief of Energy Monitor, which is a relatively new website dedicated to the energy transition that was launched by the New Statesman Media Group just over a year ago now. And we basically try and provide data-led analysis of the opportunities and risks of the shift to net zero with a target audience of policymakers, regulators, and companies. So we're here today for the launch of a new study, and this is a study that makes the case for mortgage portfolio standards. Don't switch off if that sounds complicated. Basically, what it is, it's the idea of using standards of the kind we've applied to renewables in terms of renewable portfolio standards, think of the US, or perhaps more familiar to some of you, car emission standards, which have been applied here in Europe and have successfully brought down tailpipe emissions from vehicles. The idea is to apply the same kind of standard to mortgage portfolios owned by banks. And the thinking behind that is that this will get banks more involved in renovations, and by extension, more involved in climate action. The timing seems perfect. We're in the middle of Fit for 55. We're awaiting the second part of that package, which will also take a specific look at buildings in mid-December. And of course, we're increasingly close to COP26, which will reaffirm the need for action to get us on track to limiting global warming to just 1.5 degrees. So the work today has been carried out by ClimateStrategy and partners, and you'll hear more about them later, funded by the European Climate Foundation. And for those of you who don't know ClimateStrategy, this is a consultancy specializing in strategy, markets, and opportunities created by the need for climate action. So I'm almost done here. Just a couple of housekeeping points. First of all, we would very much welcome your questions. You can enter those into the chat function, which you should have in your control panel on the side. We'll try and take as many questions as we can. There'll be time for them, particularly towards the end, but do send them in as they occur to you, and we'll try and weave them in. Today's webinar is being recorded, so you will have access to that recording and also all PowerPoints being presented. And finally, if you are on social media and want to communicate about it, please use the hashtag mortgage portfolio standards, and you will always also find ClimateStrategy on Twitter under @ClimateStreet, or ClimateST. And I think that's it from me for the moment. I'd like to welcome then Adrian Joyce to kick us off properly, Secretary General of Euroace and Campaign Director for Renovate Europe. I understand you've had a busy week, Adrian, lots going on in the realm of buildings and renovations, and indeed it's the campaign's 10th birthday, if I'm not mistaken. So over to you to kick us off this afternoon.
Thank you so much, Sonia, for that introduction. Indeed, it is our 10th year, as you can see over my shoulder. It's a great pleasure to be here this afternoon to kick off and open this important event, which is supported, as you see, by Renovate Europe and Energy Monitor. I'm delighted that our champion, Peter Sweatman, who's CEO and founder of our supporting partner, ClimateStrategy and Partners, is presenting this powerful proposal that you've just mentioned on the introduction of mortgage portfolio standards in the EU, because we see it has the potential to massively increase the amount of funding that goes to energy renovation, whilst at the same time making funding easily available to millions of Europeans. During the event today, we'll hear reactions from key policymakers and stakeholders, and you will learn, I hope, why this is such a good idea. For those of you who don't know, the Renovate Europe campaign is a political communications campaign that enjoys the support of 49 partners from industry, city networks, think tanks, financiers, trade unions, and others. We also have 45 champions together for renovation among politicians, community leaders, and financiers, all of whom are supporting our efforts. And among those partners, we count 18 national partners who are active on the ground in the member states of the EU. And our ambition in all of this effort is to see a reduction in the energy demand of the building stock by 80% by 2050, because this is absolutely essential if Europe is to achieve its long-term climate goals, and essential if we want to achieve a highly energy efficient and decarbonised building stock by that date. So on our 10th anniversary, we've been looking back, and we're very pleased to see the progress that's been made in the last decade on bringing the topic of energy renovation to the highest political level in the EU. And along with our partners, I think our work has demonstrated that long-term climate and energy goals cannot be achieved without addressing the huge energy waste in our buildings. And I'm happy to say this is now fully reflected in the EU legislative framework. Renovation, as many of you know, features as a flagship initiative in the European Green Deal and in the Next Generation EU initiative that launched the Recovery and Resilience Facility, putting lots of money into the system to help put the EU economy back on track. So succeeding in achieving the ambition of the campaign will be challenging, and for that we're going to need to have new tools and approaches to make that work. And among the approaches being considered is the introduction of minimum energy performance standards in the Energy Performance of Buildings Directive for segments of the building stock. These mandatory requirements, we hope, will be highly effective in boosting renovation rate and depth. And indeed, they're proving to be highly effective in some member states already, but only when they're introduced in a phased manner with initial signalling, followed by full implementation with penalties for non-compliance. And we have seen that in countries like the Netherlands and in France already. But financing remains a crucial cornerstone of the challenge, and it is well known that we can't rely on public financing only, like the Recovery Fund money. So there's much interest now among private and commercial banking to look at sustainable investments. And we say energy renovation is a prime candidate for those investments. But maybe the biggest source of funding is tied up in our homes and the huge equity that could be released from them. And for us, this is where the brilliant idea of introducing a mortgage portfolio standard comes in. Requiring banks to improve over time the energy performance of the real estate assets or homes that they hold in their mortgage portfolios should lead to new financing products that will be available at all street corners, making the opportunity for energy renovation more visible and more attractive to homeowners and mortgage holders to take on. We see that there are at least two places where this idea could be embedded. Firstly, in the revision of the Buildings Directive, a provision could be and should be introduced in Article 10 on financial incentives and market barriers, requiring member states to rapidly introduce mortgage portfolio standards, I would say in line with the recommendations of the report you're about to be presented with. As I said a moment ago, this, in our view, would incite banks to devise new products that would encourage a much higher number of building owners to take the decision to energy renovate their buildings. A second place where this could be embedded is in the Mortgage Credit Directive, where a requirement could be included obliging banks to gather before and after energy performance certificates that show the improvement in energy performance as part of the essential information that that directive requires banks to hold against each mortgage that's given out. So with those few words, I'm going to end my intervention. I'd like to express the hope that once mortgage portfolio standards are introduced in the EU via the revised Buildings Directive, that we will rapidly see a step change in the rate and depth of energy renovations that will put the building sector at the center of our efforts to achieve our medium and long-term climate and energy goals. So thank you for the attention. Thanks to Peter and his team for inviting us to support this webinar, and good luck with the launch of the report and with its rollout, Peter, over the weeks and months ahead. So back to you, Sonia, to really get the event underway.
Thanks very much, Adrian, and I'll thank you also for giving us, I suppose, being very concrete in exactly how you see a concept like this potentially being embedded into EU law. We turn now then to the actual launch of the report itself. And for that, I'd like to hand over to Peter Sweatman, founder and CEO of ClimateStrategy and Partners. He's one of the world's foremost experts on financing and energy efficiency, has spent 30 years in finance, the last nearly 20 of those specifically on energy efficiency and climate finance. He also headed up the G20's task group on energy efficiency investments for 5 years, and is a rapporteur for the European Commission and UNEP finance initiatives, Energy Efficiency Financial Institutions Group. I couldn't think of anyone more qualified to have led this work, and I think we're all looking forward to hear exactly what you've done and how it can change things going forward.
Thank you so much, Sonia, for that very kind introduction. Thank you for moderating today, and thank you also to Adriana and Mauricio, who are behind the stages here from my team in Madrid to help produce this event. Thank you, Renee from ECF, for your funding, and thank you, Adrian, who I've known even before the beginning of the Renovate Europe campaign's launch, which I was privileged to have spoken at. Thank you for your 10 years of constant reminder of just how urgent action on energy efficiency in Europe's buildings is. So this Tuesday was a bank holiday in Madrid, and so I predictably spent the day listening to Vice President Al Gore, who was hosting an event called Finance at Countdown that was broadcast by TEDx from Edinburgh. One by one, Christine Lagarde, Janet Yellen, Kristalina Georgieva, Mark Carney, Lord Stern, David Blood, and many of the world's leading financiers described how COP26 will bring together the world's biggest banks, asset owners, asset managers, and insurers in a net zero financial alliance. Each described their contributions of how to address financed emissions and how to accelerate the decarbonization of finance in line with the goals of the Paris Agreement. Now, I don't think I heard mortgage portfolio standards, but I may be wrong. But I'm going to tell you in the next 15 minutes why next time they meet, hopefully they will. So in these minutes, I'll tell you why we need to work with banks on buildings. I'll then say what a mortgage portfolio standard is, and then I'll suggest what might be done with that knowledge. So, why banks? Well, buildings are the most valuable and important store of value on Earth, aside perhaps from nature itself. There are $280 trillion of buildings that are built. That represents half of all global savings, and those buildings are used in collateral for around a third of all loans to companies. In energy and climate terms, buildings are the Achilles heel of the EU's Green Deal. They use 40% of our energy and emit 36% of greenhouse gases. 2/3 of them were built before standards even considered energy performance, and most of those will need to be renovated before 2050. The EU institutions know this, and in October of last year, they launched an EU Renovation Wave strategy. This wave is to renovate 35 million buildings by 2030 and will require 275 billion euros of investment in that activity annually. Further, that strategy talks to the need for mandatory minimum energy performance standards across all building sectors, which I support and I heard Adrian mention in his opening remarks. Now, what I'm not so sure about is how these 35 million buildings owners discover that they are in the EU's wave and how they get the money to start to surf it. Enter the 50 million existing homeowners and mortgage customers of banks. Mortgage lenders are huge aggregators. They finance tens of millions of homes. They are a uniform entry point into millions of conversations, and they already have hundreds of checklists and operational processes which deal with things much more complex than home renovations. Furthermore, in light of their need to identify climate transition risks, to green their lending activity to align with the EU taxonomy, and keep one step ahead of minimum energy performance standards, they need to address their mortgage books. So, where are we now? 10 years ago, I helped launch a home renovation initiative that used thermal imaging to see what they called heat bleed. Heat bleed was the code red for buildings used to inspire innovation using local contractors to save wasted energy and wasted income. We don't need a thermal camera to see the red G-label energy performance on this chart of energy performance certificate labels across Europe. By 2050, all the red, orange, and yellow on the left chart must be green, and banks with a mortgage portfolio distribution, shown as an example on the right, must green all of those homes. Seeing all this red, what would Arnold Schwarzenegger say? Don't get angry, get even. So, what is a mortgage portfolio standard? Mortgage portfolio standard is a regulatory mechanism where banks pledge to work with their clients to increase the energy performance of the buildings which back their mortgages, along a science-based trajectory for their whole portfolio. The EU first introduced mandatory CO2 standards for passenger cars in 2009. Mortgage portfolio standards are like fleet emission standards. The latest batch of fleet emission standards from 2019 are expected to reduce transport emissions by 1/3 by 2030, to save car owners thousands of euros in fuel costs each year and create tens of thousands of new jobs. But Europe did not invent fleet emission standards. Emission standards for light-duty vehicles were defined as a result of the Clean Air Act in the United States in 1990, and they have been used there to success ever since. In fact, they worked so well that when the states wanted to grow renewables, the Renewable Portfolio Standard was applied to utilities in the United States from 1999. RPS were directly responsible for the building of 82 gigawatts of renewable generation in the States, which is about half of all the renewables that has been built there. An example would be the Renewable Portfolio Standard in Maine now is set at 80% by 2030 and will be 100% renewables by 2050. Now, Europe doesn't have an RPS for utilities, but we do have energy efficiency obligation schemes in what was Article 7 of the Energy Efficiency Directive of 2012, of which we'll talk more later. So, what's more, some banks already have a voluntary mortgage portfolio standard. Concretely, ABN AMRO, who have loans worth 150 billion euros against commercial and residential property, which is some 2/3 of their balance sheet, has an MPS target of Energy Performance Certificate Level A average by 2030. ABN has partnered with PCAF to see what needs to be done and in each building, and it uses the IEA's Beyond 2 Degrees scenario to determine its MPS trajectory. In February this year, the UK went to consult on a voluntary mortgage portfolio standard, which would set an average EPC band C by 2030 for all UK mortgage lenders. BEIS launched this drive after proposing mandatory energy performance disclosure for mortgages, with a breakdown of banks' mortgage portfolios' energy performance in percentage terms required. Clearly, therefore, the UK sees lenders as allies to help improving home energy performance and hopes that they will also promote a new trust mark to ensure the high quality works in new renovations. As simple as the MPS concept is, there are 5 design elements that I think are worth highlighting. The first is all mortgage lenders are regulated parties. So that means whether they are banks, funds, or other vehicles. 2, the entire mortgage portfolio needs to be net zero emissions by 2050, and there must be interim targets every 5 years. MPS interim targets must fit into a Paris Agreement aligned pathway for the territory in which the buildings are. Real energy performance data is preferred, but energy performance certificates are a useful interim proxy, and there should be penalties for non-compliance. So when hearing this, some people have asked me, well, are MPS fair or unfair? Wouldn't banks just sell the low energy performing mortgages to avoid have to work with customers? I think the answer to that question, or how compliance would work in banks, is each lender could choose between 2 compliance routes. The first is what we'd call the customer renovation route. This would involve picking the worst performing homes, energetically speaking, and upgrading them, because the further you can move the dial on G's to A's to as high a performance as possible would deliver the greatest average portfolio performance. Or number 2, they could go the trading route and sell loans backed by low EPC properties. One of the benefits of regulating all mortgage lenders operating in the EU together is answering the question, who would buy the low energy performance properties, as everyone shares the same problem. A quick discount would appear to apply, therefore, to low energy performing mortgages, and a premium might appear for high energy performing mortgage collateral. This would not impact borrowers because the terms under which their mortgage is met would not change, but it will increase the economic benefits to banks who are successful in converting mortgages through renovation. This, I argue, creates a virtuous circle. So given that, what now? What is the art of the practical in EU regulatory terms? So the good news is that we are indeed on time, as you heard from Adrian. There are 9 relevant pieces of EU legislation or files open at present, which some of the most important ones are the Energy Performance of Buildings Directive, due to be published as a part of the Fit for 55 regulatory package on the 14th of December of this year, and the Mortgage Credit Directive. Article 10 of the Energy Performance of Buildings Directive deals with financial incentives and market barriers. I argue that a new bullet point can simply be added. So Article 10.8 could say, member states shall require all mortgage lenders to implement mortgage portfolio standards to align the energy and emissions performance of their financed buildings portfolio with the Paris Agreement. The 2014 Mortgage Credit Directive establishes common rules in the residential mortgage market to better inform customers about the real costs of a mortgage, to enable customers to better compare between competitors, and to reflect on the mortgage contract before contract closure. It needs upgrade and alignment in the context of the EU's Green Deal, and to consider physical, climate and energy transition risks and opportunities, which in 2014 were not as material nor proximate as they are today. I believe that Mortgage Credit Directive can include a duty to inform borrowers of any climate or transition risks which may face the property, including an updated energy performance certificate as a required component of the European Standard Information Sheet called ISIS. called, sorry, ESIS, I should say. That's perhaps a bad mistake, ESIS. Further, Article 14 could include a duty of advice, and that would require engagement on potential deep renovation options to allow customers to compare these costs and reflect upon this information at the key trigger point, getting a mortgage in that mortgage cycle. Finally, MPS are indeed compatible with climate mitigation thresholds that have been published in the EU's Taxonomy's Delegated Act. And they will help support increase banks' green asset ratios, which the European Banking Authority is considering to assess taxonomy relevant and aligned lending ratios and support improved climate risk assessments of the future, as indeed also is indicated in the ECB's latest strategy. So, to close, there are 4 key takeaways from this report, and I will place a link to the full report in the chat. The first, mortgage portfolio standards will align mortgage lenders with the EU Green Deal and the Renovation Wave strategy. An MPS can address 50 million home owners immediately. MPS will accelerate financed offers to the low-hanging fruit for energy-efficient renovations, and it is a structured way for banks to manage climate transition risks in their mortgage portfolios. Thanks very much.
Thanks very much, Peter, for I think a very clear and nonetheless concise but comprehensive introduction to the work you've undertaken. Does anyone have any immediate questions to Peter? He will join us on the panel as well, so if you need a little more time to digest, that's understandable. I don't think I've seen anything come in via the chat. And maybe before we hear from the European Commission and the panel, you've obviously been speaking to people about this, Peter. So one question would be, I mean, how enthusiastic are different stakeholders in general terms about this? Or if you like, what's the main question that's been thrown back at you when you come with this idea? What do people ask?
So first of all, I think I very much think that people welcome new thinking. I mean, the thing that I've most been greeted with when talking about a mortgage portfolio standard, apart from the name, which tends to perhaps sound too technical and maybe shy people away, even though, funnily enough, portfolio standards, as I've illustrated, have been used quite frequently in the regulatory sphere, is the question, does this solve all of the problems in renovation? And it doesn't. But I do think it solves one of the enormous glaring problems, which is how on earth will we renovate 35 million homes by 2030? So we really have a very limited audience of entities that are capable of contributing to millions of home renovations a year. And so I think at the moment, in the supply chain to renovations, we have to have, like we do, I mean, it wasn't really in the utilities sort of mandate to save energy on behalf of their customers. It wasn't necessarily in the light goods and the light vehicle manufacturers mandate at the time to save emissions and greenhouse gases. However, over time and with the right regulatory tools, those organizations have been aligned and now support indeed many of the regulatory processes and approaches that have worked for them and for society. And I think this is another one of those. So I think there's a little bit of sticker shock, perhaps when I first talk about this idea, but then as it sinks in, there's been a real sense of engagement.
Okay, so a bit of surprise initially, and then why didn't we think of this sooner type response. Okay, thank you very much. I propose we move on, and indeed, as I said, Peter will be around to answer any other questions you may have as we get going. So what we wanted to do was beyond introducing the actual study, was to give you a sense, I suppose, of how different stakeholders are engaging with it and the kinds of questions that are coming up. And to kick us off for this next part, before we go into the panel, I want to welcome Paula Ray Garcia, who's here from the European Commission. I think she's dialing in, so she's not able to be with us visually. Nonetheless, you will be able to hear her loud and clear via the phone. So she's Deputy Head of Unit at DG Energy, and the unit she works in focuses specifically on buildings and products. I'm guessing, Paula, this means that some of the legislation, notably the Energy Performance of Buildings Directive, is something you have been and will be working on directly. She's been with the Commission for a number of years, has been with it since 2005, working across the DGs on energy, environment, and health and food safety, and has been Deputy Head of Unit, as I said, for Buildings and Products since last year. So, Paula, over to you to perhaps give us a flavour of where we stand on plans to revise the Energy Performance of Buildings Directive, your thoughts on mortgage portfolio standards, and if you can, well, tell us if they're in there. Thanks very much.
Yes, thank you very much. Can you hear me well?
Yeah, perfect.
Okay. No, thank you. Good afternoon, and thank you very much for inviting me to this event. Unfortunately, there was a problem with the GoToWebinar tool, so I needed to dial in, but I hope nevertheless that the sound will remain clear throughout the event. So when going into this topic, I think it's very important from the Commission side that we keep in mind really what is expected now from buildings in this period and in all these legislative revisions that are going on and that were mentioned already. And here the analysis that was done for the climate target plan showed that the effort from the building sector needs to be very important, because buildings need to more than halve their emissions for the EU to be able to deliver on the increased climate target of 55%. So the ambition really needs to be very high, but it will not come from a single measure or from a single instrument. And then in this context as well, what is also important to recall is that the analysis that we did for the Renovation Wave strategy showed that what is needed in this sector, because it's very granular, there are many barriers, many of those are also non-economic. So we need to act on several fronts at the same time. There is a need for strengthening the regulatory framework that is very clear. We also need to boost the financing efforts, and this, of course, beyond the big push that we have now from the recovery funds. And it is also important to reinforce governance and capacities at all the levels. But without covering all that and maybe focusing on the aspects that are most relevant for our discussion this afternoon, on the financing side, this is really a fundamental aspect, because we need to mobilize really private financing at a very large scale. And in the context of the Renovation Wave communication, we had estimated something around 275 billion of euros annual investments to meet our objectives. So for this, we really need to mobilize actors like the ones that were mentioned, clearly financial institutions, banks, and definitely not be able to rely only on public finance. That is very clear. And at the same time, for this to happen, we also need to give a very strong regulatory signal. And in the very specific context of the revision of the Energy Performance of Buildings Directive, it's also important to mention that this is certainly an integral part of the Fit for 55 package, or now called Delivering on the European Green Deal package, even if it comes part of a second wave, let's say, of legislation now in December this year. And our aim with this revision is really to activate both the supply and the demand for renovation, but it will not be limited to existing buildings and to renovation. We really want to do what is necessary to trigger a step change for decarbonizing building stock. So to look also into all the other aspects of the directive to some extent. I mean, of course, some aspects will be the priority, but we really want to go through the whole directive and see how much it remains fit for purpose. We are, of course, now at a particular moment, because it's still at the technical level, let's say, there is no final position from the Commission. This will only come on the 14th of December when it is adopted. So what I can give is a flavor a bit of what are the main issues we are looking at, but without conclusions really at this point. So it was mentioned already the importance of mandatory minimum energy performance standards, and that for us is really a central piece of the revision, because it should equip the directive with something that is missing, which is a direct trigger for building renovation. The directive already has indirect triggers, like through major renovation or through the definition of long-term renovation strategies. But with those standards, we believe that then it would have a direct impact on renovation. And next to it, we are also planning to boost the provisions of Article 10 on financing. That was also mentioned. And here we are always very curious to definitely learn about new approaches and experiences like the ones on the mortgage portfolio standards. And we would like to also understand better how this would fit, in fact, and how would it connect to minimum energy performance standards that are already in place in several member states and that we are planning to reinforce. So we would be curious to learn a bit more, and maybe all these learnings are not possible right now, they will come later on, but it is definitely an interesting area to further reflect upon. From our side, we also see that the reinforcement of Article 10 needs to go next to a strengthening of the provisions on long-term renovation strategies, with the idea of making them true building renovation plans, with financing support attached and also with clarity on what are the targeted improvements to be achieved over time. And in all this, of course, we'll need to ensure coherence on all the building-related provisions across the different Fit for 55 legislative proposals, because we have such provisions across several of the pieces of legislation that is being revised, and we need to make sure that all this remains strengthened and coherent, and also to ensure complementarity with the Sustainable Financing Initiative and the taxonomy. Going back now to the Energy Performance of Buildings Directive, we also look into how to reinforce data on the building stock, clear information to citizens, and we plan to revamp energy performance certification, which is also an aspect that is mentioned in the report, and look into other tools like EPC databases, renovation passports, and trying to establish a kind of harmonized understanding of what a deep renovation is. So with this, we see several points of connection with some of the elements that are put in the report. So I think from my side, this would be a bit my first reactions, pending, of course, the discussion in the panel and the questions that may come up. So thank you very much, and I pass it over back to you.
Thank you, Paula. Maybe one follow-up. I appreciate, because the proposal is in preparation, so obviously you can't give us a full rundown of what's in it. But interesting what you said, that minimum emission performance standards are in a way the first time we would have a direct trigger for building renovation. I mean, are you, from what you've heard and seen of this concept of mortgage portfolio standards, could they similarly be a first direct trigger for the financing of building renovations?
Well, on this, I think at this point we have interest in the concept, definitely. But talking also to the team, we have more questions than answers. So that's why I'm very much looking forward to the discussion. It sounds definitely as an interesting concept, something to see how it's rolled out. I understand it's already been done so by several financial institutions, and I think we'll learn a bit more about that, and to see a bit what is the experience, in particular, if we can see how it's happening this in countries that have already also minimum energy performance standards. Because somehow, as I mentioned, we see minimum energy performance standards as the central piece of this revision of the EBPD. So very much our thinking goes on what else we can do to make sure that this happens and at what time. So definitely an interesting concept, but at this point I don't have really an answer from my side, rather questions. Thank you.
Okay, no, fair enough. So for you, what's really important is, or at the heart of this new proposal will be the minimum energy performance standards, and therefore mortgage portfolio standards. You're really interested in how they might work and how they could support that or link back to that or help you promote those. Yeah, that's clear. Thank you very much. Let's move then to our panel. And a reminder to send in questions, anyone joining us this afternoon, if you have them. You can do so via the chat, and we'll be happy to take them, so they can be either to Paula, Peter, or anyone else on the panel. Let's bring up our panelists then. I'm hoping we can bring you all up at the same time. That's Emilia Holdaway, Murray Burt, Sandra Schoonhoven, and Kieran Cuff. Can we get all four of you? I can see three. Kieran, are you there as well? Or not yet, potentially? Yeah?
There we go.
Okay, perfect. Nice to see you all. So you have the pleasure now of giving us a bit of feedback on Peter's ideas, and as you heard from Paula, there are, for some at least, more questions and answers at this stage. So I think Paula, and I imagine many people joining us this afternoon, are looking for a bit of outside input as to how excited people be about this. How realistic is the concept of a mortgage portfolio standard? How good a fit is it with things like minimum emission performance standards for buildings? And we wanted to kick off with you, Emilia. Emilia Holdaway, here from the Institutional Investors Group on Climate Change, where she is head of policy. And I'd like to invite you to take the floor first. And I appreciate you may not deal with building renovations on a daily basis. So I guess what would be interesting to hear from you is, in a broader sense, what do investors expect from banks these days when it comes to climate action? And more particularly, if you can, what are the expectations for how to do more to boost building renovations?
Thank you very much, Sonia, and thank you very much for having me here today. It's great to be able to participate. As Sonia said, I'm Policy Director at the Institutional Investors Group on Climate Change, or IIGCC. IIGCC, we're a European membership body for investor collaboration on climate change. We have 350 members, collectively with over 43 trillion euros in assets under management, mostly pension funds and asset managers. I will absolutely tackle your question in relation to banks, but I might talk more broadly about the different pieces of the picture that the sort of work we're doing in the investment community touches on the mortgage portfolio standard. A major part of our work within IIGCC is creating guidance for investors on what net zero means in practice and across different asset classes. And Murray, who you'll hear from in a moment from DWS, co-led the guidance that we put together for commercial real estate. I'm sure you've been seeing in the press the big wave of net zero commitments being made by players from all parts of the economy. Investors have been doing their part, and one of our initiatives this year has been the Net Zero Asset Manager Initiative, to which 128 asset managers with $43 trillion in assets have signed up. And later this month, the first wave of signatories will be publishing their interim net zero targets on the road to net zero by 2050 or sooner. So how are investors going to go about achieving these net zero targets? What are the levers that we can pull? A key way for investors to make progress towards net zero and these types of targets is to use their influence as shareholders or bondholders in major companies. To support these efforts, IIGCC publishes expectations for companies in key sectors such as oil and gas, mining and cement. These expectation documents are then used by investors in various ways in meetings with company senior management and to guide shareholder voting at annual meetings. In April this year, we published our first set of expectations for banks, supported by investors with $11 trillion of assets. In brief, the expectations request banks to set a net zero by 2050 target, with interim targets setting out the pathway in the short term and medium term towards net zero. And investors' expectation is that these targets would cover not only the operational emissions of banks, but also bank scope 3 emissions, which would include mortgage lending. Investors also have expectations in relation to banks disclosing their climate risks and strong governance to manage those risks, including board-level accountability for delivery against net zero and linking variable remuneration to achievement of those net zero targets. Another sort of part of the picture that we're working on is policy advocacy, and we need to have the right policy frameworks, the right enabling environment to see the net zero transition happen. Towards that objective, we're leading on the 2021 Global Investor Statement to governments on the climate crisis. It sets out investors' global asks of all policymakers. It's currently been signed by over 600 investors and counting, which collectively represent half of all global assets under management. So this is asking all countries to strengthen their 2030 targets in line with 1.5 degrees, to prepare net zero sector roadmaps and enabling policies for implementing these. So specifically, so I just want to sort of set that out in terms of there is a huge movement in terms of the investor community wanting policymakers to help them and strengthen their hand when we're trying to influence change within different sectors of the economy. Just coming back to policy, a little bit more detail, specifically on buildings policy, we've been advocating for a step change in EU policy and especially scaled up efforts on renovating buildings. So things like mandatory science-based minimum energy and carbon performance standards for buildings, strengthening the comparability, accuracy and science basis for energy performance certificates, and especially relevant to today's discussion, we support the call to develop green mortgage portfolio requirements for mortgage lenders. One of the challenges for investors seeking to align real estate holdings with net zero is very much the availability and variability of the methodologies used by member states for energy performance certificates. So it becomes really hard to compare energy performance for buildings across member states if different member states are using different methodologies and different criteria for Class A EPCs. How can you be sure if your real estate holdings are consistently aligned with a net zero trajectory? So EPCs, science-based aligned and harmonised methodologies across member states, as well as full disclosure of EPCs, is something we're advocating for in a central database that would be accessible to building owners, to the renovation industry and to banks. So, you know, wrapping that all together and mortgage portfolio standards, we very much see these types of standards being part of an overall package of policy reforms that can better link mortgage lending with the EU's net zero goals and would also align with the leadership of many major banks' own net zero commitments. I'll leave it there for now.
Okay, thank you very much. Yeah, I guess it's clear that mortgage portfolio standards are one part of the puzzle. They're clearly not going to solve everything on their own. But interesting what you said about the your expectations for banks. So from April this year, that there is an expectation when they commit to net zero that scope 3 emissions are part of that, and that would include mortgage portfolios, you say. Can you say anything else at this stage? Maybe not, I guess that may be difficult, but this particular concept, I guess buildings and renovations, to what extent is that on the radar of investors as a big source of emissions and a big potential source of emission reductions through a tool like an MPS?
I think it very much differs investor by investor. I think sort of buildings is recognised and real estate as a major part of many institutional investors' holdings. So it's on the radar, and I think sort of looking for innovative ways to try to drive change in this very decentralised sector is why I think the mortgage portfolio standards approach is really interesting and deserves proper consideration, despite the challenges and the things that we would need to work through to make it work.
Yeah, thank you. Yeah, that's I think hitting the nail on the head. Indeed, the fact that it is so decentralized, and that's what Peter also explained. How do you get all of these, these 35 million renovations happening, and banks through their mortgages are one, I guess, centralizing feature of that. Thank you.
Absolutely. Sorry, Sonia, I'll leave it there and we'll have the debate later.
Yeah, I know, we're going to launch into it before we know it. Let's move on to you, Murray. You've already had a brief introduction. Murray Burt, a senior ESG strategist at the DWS Group, which used to be part of Deutsche Bank until a couple of years ago. Also a member of Emilia's organization, I'm thinking. And Murray is also a steering committee member of the Energy Efficiency Financial Institutions Group that we heard Peter being affiliated with earlier. So Murray, you also, I guess, you will have some overlap with Emilia, I imagine, in your perspective, where it comes from. But maybe we can zoom in a little bit on, well, a lot has already happened, and what is it? I mean, it's not like building renovations have suddenly appeared as a priority that we should have thought of 20 years ago. It's been a long time that we've tried to increase the renovates, increase the depth of renovations, and so forth. So what have we been getting wrong? What needs to be done differently than in the past? And the question I'm mostly leading up to is the mortgage portfolio standard. Is that the innovation we've been waiting for, and at least something that could make a real difference?
Thanks very much, Sonia, and thanks for the invitation to speak with you today. Basically, in short, I think it is. An MPS could be a key part of the policy landscape for unlocking investment. So just a further introduction. So I work with DWS. We manage 859 billion euros on behalf of individuals, insurance companies, pension funds, and other institutional clients. We're majority owned by Deutsche Bank, but we're listed on the Frankfurt Stock Exchange as an independent company. On November 1st, we will publish our interim net zero targets as part of the Net Zero Asset Managers Initiative that Emilia mentioned. And my role is to publish reports to advise our clients and our investment professionals. And I really enjoy working with IIGCC and EFIG on these topics. And while we don't provide mortgages directly to individuals, we invest across a wide range of asset classes, including banks, shares, and bonds. And we also invest in covered bonds and mortgage-backed securities that will have a role in the virtuous circle that Peter mentioned. Other ways that we focus on energy efficiency, including using our investor influence with companies and banks, including working with IIGCC. We own and lend to a variety of commercial real estate and apartment buildings. We manage the European Energy Efficiency Fund for the Commission and the EIB, which lends to municipalities. And last year, our European Private Equity Infrastructure Fund helped establish and own a company that facilitates commercial retrofits. Now, Europe is really in the midst of its third major set of energy efficiency reforms. And despite previous efforts, energy efficiency investment has actually been falling according to the IEA. And this is why we need new types of policies to truly address the multiple barriers of energy efficiency. I commend Peter for his NPS proposal, and I agree with Emilia that it could be a help to unlock investment and attention. I also note that some insurance companies directly provide mortgages to individuals, so an NPS could ensure that all lenders are in scope. And I just have a couple of comments regarding how an NPS could be implemented and other reforms that are necessary. Now, one absolute precondition, I think, is that that member states have to follow existing law and implement an available database of energy performance certificates. Many don't yet have that in place. And this will also support the European Central Bank's climate stress tests that will come in next year. But as Emilia explained, EPCs are not themselves sufficient. And the real estate guidance that I co-led really had at center the Carbon Risk Real Estate Monitor, or CREM project. And this is a set of science-based emission reduction pathways or curves for how the energy intensity and carbon intensity per square meter of different types of buildings in different countries has to change. And I think I've previously stated in other presentations that regulations are more likely to be effective if they use the same metrics that are used by investors and by banks. So if investors are using CREM for their commercial real estate portfolio, I think that banks and policymakers should also be using it for mortgages. The EU buildings taxonomy really needs to be updated to reflect CREM and be linked with these emission reduction curves, because they're much more science-based than the current buildings taxonomy on buildings. I think it could be useful for any MPS policy to also provide guidance for how to deal with historical buildings, because there are many very, very, very old buildings in Europe which we treasure as Europeans. An MPS will only be effective if it's really accompanied by other complementary policies. Requiring banks to integrate energy efficiency into their lending with the ideas that Peter presented, I think would be an excellent start. And in a few weeks' time, an EFIG working group that I'm a member of will publish an important report with evidence for how energy efficient mortgages can have lower financial risk and higher green property value. And this evidence should be used to reform the Basel capital cost regulations on green mortgages and green mortgage bonds. An MPS and the renovation wave will also basically requires a new type of European supported loan where a portion of the cost of a renovation is only repaid when a building is sold. And that's an policy idea that probably needs its own webinar itself. And perhaps we'll do that in the near future. And finally, I think the renovation wave requires energy utilities to basically be procuring or contracting for energy efficiency. This is starting to happen in the US, and Europe should be adopting and replicating this idea. I wrote about this idea extensively in a report last year, and there's an EU project which is also examining this idea. With natural gas prices having spiked so much, we need to facilitate utility companies procuring heat savings from deep retrofits instead of buying in Russian natural gas and LNG imports. This would create a market incentive or revenue for retrofits and would really complement the requirements of an MPS on banks. So I think that if these ideas together are taken up, then it will really accelerate and expand the number of banks that are focusing on energy efficiency, encourage banks to work more closely with their national governments to create the local policy frameworks and to strengthen their supply chains. And it would really help us get the prize of millions of jobs being created to renovate our buildings to be net zero and much more healthy. So I hope these comments are useful, and I look forward to the discussion.
Thank you very much. One follow-up. What do you see as the biggest challenge to getting an MPS adopted, implemented, used across the board?
I think it's the busyness of all the activities that are going on. There are so many initiatives and policies and regulations and the initiatives within the private sector, and I think that's the biggest difficulty. I think is getting the attention necessary, and I think investors in their engagement with banks have been focusing perhaps more on, for instance, fossil fuel lending rather than on the mortgage portfolios, because it's sort of seen as, oh, we can do that. It'll be easy. It isn't really easy, but it is achievable. But I think an MPS would help raise up energy efficiency, because that's the problem with it, is energy efficiency. It hasn't really been first. It's always been second or third or worse. So I think it would help raise the attention.
Yeah, that's a good point. And I guess indeed, shifting or moving out of gas and coal, these are headline grabbing. They're easy headlines. So in that sense, easy to put first and to also to win goodwill with. So that's I think a fair point. Energy efficiency has always fought to be the first fuel, as the IEA calls it, and to get the necessary attention. Yeah. Partly linked to its often decentralized and fragmented nature. So thank you. Yeah, that's a good point. Let's move on then to Sandra Schoonhoven, Head of Sustainability at a bank, at ING. And under her leadership, I think, has been doing an awful lot on sustainability. It's nowadays ranked as one of the leaders among banks on sustainability by organizations like CDP, the Carbon Disclosure Project. And was, I read, the first international bank to align its 600 billion euro lending portfolio with the goals of the Paris Climate Agreement. So Sandra, I think, yeah, having heard from the investor perspective, it would be really interesting to hear from an actual bank who would be confronted in a very real way with an MPS. How you feel about that, and And ING, of course, as I said, has been doing a lot on sustainability. And just a month ago, you launched your first integrated climate report, which, if I understand correctly, integrated both the climate risk and the climate opportunity, the climate action potential into one report for the first time. Specifically, what did what actions were there in there that would make your mortgage portfolio more sustainable? And is an MPS part of the package?
Great, thanks. Great introduction, Sonia, and thanks a lot for having me here. Indeed, I work for ING. I think most of you will probably know us as a large bank in Europe. We serve millions of customers, around 39 million to be exact, and a portion of that is, of course, also homeowners benefiting from a mortgage. Not so many customers maybe, but it's a very large part of our balance sheet. It's almost half. So when we look at climate action, yes, we could look at fossil fuels, as was mentioned before, and that does create eyeballs. But if you look at the real impact on our balance sheet and real impact on the ground, that's actually through buildings. So absolutely a topic of big interest to us. And maybe because we already have an MPS in place, so we actually apply this voluntarily, maybe it would be good also to add a bit of concrete actions to this panel discussion on what does it mean, how does it look like, but also what kind of challenges do you then encounter, and how could we move this forward before we might consider to make this regulation, because then are you really shifting the needle? That's a bit of my question mark, but I'll come to that later. So maybe first on how do we do it? And we call all of this our Terra approach, and yes, you can read all about that in our integrated climate report, which is online, ing.com, so just download it and you can read on all these sectors that we have a portfolio standard on, but then also to our mortgage portfolio. So we launched it already in 2019. And back then we only were able to disclose the portfolio of the Netherlands and Germany when it comes to mortgages. And now we have also included Poland and Belgium. And now we're at 70% of our entire mortgage portfolio. So that already brings me to the first challenge. Why not 100%? And to be very honest, Belgium is only in the first state available. Because we just simply don't have the data. The data is not available to do that work in other countries. So we really, really need to speed up on accessibility of the data in order to be able to do that. So what do we measure? We look at our assets, so the houses that we finance, and we look at the CO2 intensity of those properties. So we measure the kilograms CO2 emitted per square meter of those houses. So what we need is a good estimate of what the CO2 emissions would be for that property. We use the energy labels as a proxy for that. And of course, we need the square meters for that property. And then we can calculate it per asset. We take 100% of that asset on us. And then we calculate it for our entire portfolio. Then the alignment part, we look at how is that emission intensity related to the below 2 degrees scenario of the EU, the B2DS EU. And then we look at are we aligned at this moment, and how should the trajectory going forward, how should that look like? In order to establish also a target, of course, 2050, we all know that where we need to be, net zero, but what about the intermediate targets? We have looked at local governmental plans. So for example, for the Netherlands, we have looked at the ClimateStrategy, which is clearly laying out the pathway of the Dutch government on CO2 emissions, specifically also for the built environment. And based on that, we came to the conclusion that we are able to land at a certain point in 2030. We feel, as a bank, we cannot move a whole lot faster than the governments would be acting. Otherwise, we would probably penalize some homeowners who might already be in trouble in paying the bills for their energy or even finding a property in itself. As you know, in entire Europe, there's quite some difficulty in finding an affordable house. And actually what you see is that there's already a gap between governmental plans and where we need to be if we want to align with the Paris Agreement goals. You can read that in our climate report as well. Meaning that if we want to close that gap, the governmental plans or regulations to energy efficiency in houses need to be speeded up in order for us to now say an MPS is required and for banks to align with that. I think that should first be tackled before we can ask banks to align with the MPS and the standards that need to come with it. Of course, the disclosure of an MPS can be made a requirement. I think that is just, normal business standards. But in order to also say you need to align with the climate scenarios out there, then governmental regulation also needs to be speeded up. And of course, the data is a huge problem that also needs to be solved ASAP, and preferably not just the energy labels, but also real energy consumption of these assets. Because what we have noted is that there is still a big difference between an energy label as a proxy and the real energy consumption of these assets. And then finally, maybe to close my argument for that more needs to happen than just an MPS to banks, is that the homeowners need to be included here as well. If we don't ask them to act, it's going to be very difficult to achieve anything. And a point that we have made to that also in our report is that we've launched a huge campaign on this topic to create awareness around with our clients. And even if you could get something for free, not a lot of people actually acted on that. So if we don't achieve homeowners to start acting on this, next to banks acting on it, getting more accessibility to data, I don't expect a lot will happen by just putting out an MPS, which is required to all banks. But I do believe it's a very good first step, and that's why we've also started that journey for ourselves. I'll leave it there.
Okay, thank you. Thank you very much for that. I think a clear set of recommendations. So one, you're missing data. Two, we also need to involve or engage with homeowners. And three, if I understood correctly, you basically said that, disclosing an MPS is fine, but requiring banks to align with it before that happens or becomes a requirement, government should first align their own policies with what's needed to reach the Paris Agreement goals. Yeah. One quick follow-up, which is you're effectively a first mover in this field. Has that posed you, I guess, what are the advantages and disadvantages of that? Have you found yourself in an uncomfortable position at any point? Have you been burned by this and learned from that and have useful advice for others who may wish to follow with an MPS voluntarily so far?
Well, maybe the disadvantage is that you need to really discover everything yourself. So it takes a lot of time before we can actually embark any new country on our journey. What kind of data is out there? What are the scenarios? That's a lot of work. But I mean, other than that, no disadvantages. And maybe the advantage to now know very clearly what is needed in order to really move the needle.
Yeah. Okay. Thank you very much for that. Let's move on then to Kieran Cuff, here from the European Parliament. He's a Green MEP, has been since 2019. Irish, originally an architect and urban planner, so very familiar with buildings. And then stand in the Parliament, so you work on across transport and energy issues, and building and housing, I guess, inevitably one part of that. We've heard from a bunch of stakeholders now, also from the European Commission, if this were to make it into a legislative proposal, the Parliament's role would obviously be further down the line. But I think it would be interesting to hear from you your views and a sense of whether Parliament, obviously you can't speak on behalf of every MEP, but a sense of whether EU lawmakers would be open to an idea like this, whether you see value in it, and the idea of how it might be brought into Fit for 55 to really have an impact. You're still muted, I think. No. Try again. I can't hear you. Can the others? No, I don't think so.
How about if I take the headphones out? How are we now?
Yeah, that's perfect. Yeah, that works.
Damn headphones. Apologies. Great. Well, we work with the microphone in the iPad, so apologies for the technical glitches. I'm having them all afternoon today for some reason, but at least the call is staying there. It kept going, disappearing on a previous call. But look, I was listening to Sandra, and Sandra, you're so right. So many of the issues that you mentioned, they do come back to the consumer and encouraging the consumer to take the step, particularly towards the deep renovation. And unfortunately, a deep renovation with the insulation and the heat pump, it's not quite the same as a Tesla. It doesn't quite get the admiring looks from the neighbor. I don't know, maybe we need a kind of a Hygge label for a deep renovation, or something that tells everybody they've gone for it. They've done this incredible thing to their home. So maybe there's a messaging issue that's there. But I digress. I want to go back to when I was drafting my report on the renovation wave for the Parliament. And I did think it was crucial to have a section on financing and funding the renovation wave. And actually, I looked for a specific EU fund to finance renovation projects, but I couldn't get political acceptance for this across the board, nor indeed from the European Commission. I think there was a worry that it would increase the amount of red tape that comes with EU financing. But clearly, there is a need to find innovative solutions to financing renovations. And I'm encouraged to see a move towards this coming from the private sector. And there's many best practices when it comes to improving access to bank finance for renovation projects. This includes fair market loans, loan guarantees, long payback periods, collateral waivers, and grace periods in case of payment failure. But over 90% of the respondents to the European Commission's public consultation on the renovation wave said that the lack of private financing was the biggest barrier to renovations. And it's important to note, and Sandra said this, the vast majority of individuals use their own capital to fund building renovations, which means until they have sufficient capital, they won't be able to renovate their homes. So incentivizing the private sector to help finance energy efficient projects would get the ball rolling in this area. When I looked around Europe, we saw some good examples at a local level in Lithuania and in the Czech Republic. And I think if we can get commercial banks interested in working on this level, it would do a tremendous amount of good. At the moment, there's a low or a slow rate of return on energy efficiency programs. And I think that's one of the reasons why banks are slow to invest. But there is this issue of certainty. A deep renovation, it's very clear what the returns will be. And I think lending institutions want certainty. And if that can be there, then maybe it helps increase the rollout. So I'd like to see better coordination between the public and private sector on financing, particularly when it comes to low-income homes, low-income family units. So the blended funding for one-stop shops is important. This can be done by incentivizing banks and other financial institutions to make the one-stop shops happen, so the expertise is there for banks and borrowers. And the use of recovery funds at national level can be a low-hanging fruit to help achieve this. Just on the issue of combating energy poverty, it is more difficult for low-income households that don't have the money to access loans or sufficient collateral for renovations. And these are the households that are particularly prone to energy poverty. So for low-income households, and as well as for housing that includes low-income tenants, there needs to be some type of hybrid public-private funding mechanism. And we need to ensure that we don't create a two-tier system that could exacerbate energy poverty in some areas by favouring one type of mortgage holder over another. So I think there is a role for an integrated instrument like mortgage portfolio standards within the framework of the revisions to the Energy Building Performance Directive. And it's exciting to see some banks prioritising things like green mortgages and green bonds. I think KfW are also doing this. So incorporating the energy performance certificate of a building into its owner's mortgage is an innovative approach, and I'd like to see how the commercial banks react to adopting it. Certainly within the Parliament, we will explore every option to ensure that renovations are adequately financed through the member states. So look, in conclusion, I'm saying this certainly can be looked at. I'm so conscious that we need to bring the low-income households with us, and we have to be careful that we don't over-bureaucratize what we do. So I'm enthusiastic. I don't want to say it's going to be in the revisions. A lot depends on what the other political groupings have to say about this. Thank you.
Okay, thank you. Thank you very much for that, and for introducing, I think, energy poverty, which we hadn't explicitly talked about. So just to, I guess, to clarify, so you do see potential for an instrument like this to help boost the renovation rate. Well, on the one hand, in parts of Europe where there is still the biggest untapped potential. You mentioned Romania, Czech Republic. I'm thinking Central Eastern Europe. And secondly, could it also help people in energy poverty?
I think it could if it's done correctly. Look, I think in many member states we need capacity building within the construction sector. We need new skills, but we also need communications and the financial instruments. So it's not just provide the financial product and people will magically flock to it. I think there are many kind of roadblocks or stumbling points or bottlenecks that we need to overcome. But putting in place a clear financial instrument, I think, is part of a suite of measures that we need.
Okay. Sandra, you had a question for Kieran. Do you want to ask it? You can ask it to him verbally.
Yeah, I thought the one-stop shop comment you made is really spot on. I was wondering if in that shop only financial instruments should be found, or a broader set of tools like know what to do to your house, how to get it done. Well, what's the first step? All of that, and then if that is the case, who's the shopkeeper?
Good question. In some instances, it might be local or regional government that would provide this, but clearly it has to be not just the financing mechanism, it's the how-to toolkit of what you might do, technologically speaking. Do you need insulation? Do you need a heat pump? Do you need to have integrated e-charging for your car? All of this can be part of what's offered. In some instances, it's literally a window and a door and a kind of a ground floor unit within an apartment complex. In other instances, it's an online facility or a website that people go to. Sometimes it'll be a person who will call around to your door and say, I'm from local government and I'm here to help you. In other instances, you might go to a physical location and have a chat across the desk with somebody. But it's not just about the financing instrument, it's about the physical measures that you might that you might think about. I mean, for instance, people think about a deep renovation and they think about an electric car, but they rarely think about the two together. So maybe it's a package that includes both of these, the mobility as well as the building.
Yeah, thank you. Peter, you wanted to come back in as well, and Murray too.
So thanks. Yeah, I've been listening intently, and I think this has been a fantastic discussion. Murray mentioned something, and Kieran, you also mentioned something which I think is important to add to mortgage portfolio standards. Sonia, when you said what is the most common question I get, I think very often people who've been talking about energy efficiency in buildings for a long time sort of fall into the trap of, or you can be trapped in dealing with a element or component of the market, and then the question comes and it's about another component of the market. So mortgage portfolio standards are designed to deal with 50 million of the market. There are 220 million households in Europe. So this is an instrument that may be useful for, I don't know, 30%, 40%, half the market. So let's not make the mistake of saying that something that's well designed for half the market has to also deal with the other half of the market. There is an absolute need for recovery money and grants to be paid to upgrade the homes of energy poor and the people who are in elements of society that can't get a mortgage. So let's be clear. And that, I think, has been well recognized by governments in terms of their recovery and resilience plans, for example. Now, I think there's a gap in the middle, which is people who perhaps are suffering and that can't make payments to their bills every week, haven't got the time to get a mortgage, or so there's this middle sort of group of people who may not be well banked, may be living in debt and so on, who need, I think, a new instrument, which Murray hinted at, which I call the EU Renovation Loan. Now, without going into this, think of the amount of money that European governments were offered at EU costs of funds. So the EU just launched a green bond, I noticed, that was hugely oversubscribed, 135 billion euros of investors waiting to give the EU their money. So maybe that money could be channeled at the EU's cost of funds, which is nearly 0%, to the people who can't afford regular loans. So those people can get renovation loans provided through European systems to do deep renovations, and in my design of that instrument, on a zero coupon basis. Now, zero coupon just means you don't pay until the end. What does that mean? That means that you get the money to do a deep renovation, irrespective of your income status, your bankability status, what have you. You pay a tiny amount that gets rolled up towards the end. So an example would be, if you borrow 20,000, you pay off 23,000 after 30 years. 23,000 after 30 years, having paid nothing in the interim, is effectively EU borrowing rates. We don't get access to that as regular citizens, but we could. If member states were to get around an EU renovation loan, which would be a complementary financial instrument, thereby answering the question that financial institutions and banks say, which is, what about these people who we'd love to see renovate their homes but can't afford it? Answer: EU renovation loan. Thanks.
Murray,
maybe also just to add, I think a renovation loan could also help with people who are close to or in retirement, because banks can't really provide a new mortgage or new mortgage lending to somebody who's in retirement, and also there are many people who don't have a mortgage; they just own a building, and perhaps they don't want to take on more debt, or they're not able to. And so that could also be a part of it, and I agree. Like this is for a mortgage portfolio standards for part of the market, and it shouldn't do everything. Banks should be looking at their entire mortgages and all their customers and seeing how they can improve their buildings. But I had a question for Sandra. You very correctly pointed out that member states' policies in this area are not sufficient, and has your MPS sort of encouraged you to engage more with the Dutch government or the Belgian government or on the details of their energy efficiency and policies, and would and what do you think your counterparts in other banks would sort of think about an NPS type policy if it were to come and as a policy proposal?
Very good question. So I can't speak for the other banks, to be honest. I think if you're already on the trajectory of like many others have of disclosing a voluntary NPS, I think you would not be opposed on making this more of a standard. To your first question, have you interacted more? Not an awful lot more, to be very honest. And I think just by being very transparent on how we calculate and actually showing that gap, that conversation should actually be started. But I think it should be multiple conversations. So yeah, looking forward to having that more.
Okay, thank you. We're going to have to wrap up soon. We've only got a couple of minutes left. I wondered if anyone, maybe Peter, your best place, wanted to come back on the question Paula left us with earlier, and you're still there, I hope, Paula. I hope there's been some answers to your questions, which was how an NPS could link specifically to these minimum emission performance standards for buildings, which are something that are definitely, that the EU definitely wants to take forward. Do you have any thoughts on that to wrap up?
If that's a question to me, I think it's like a hand in a glove. So the Commission has said they're going to establish minimum energy performance standards. To me, that means that large swathes, or in the countries like France, the UK, Holland, where we've seen those types of measures, it's created a great shift in value. So very quickly, it becomes clear that you have to do a renovation if you're in a certain energy performing building. Therefore, the cost of that renovation, net of its energy savings, becomes attached to the value of the building, and the markets quite quickly react to that. So I think that's not actually a bad thing, because if people have mentioned the affordability of housing, there is an asset bubble going on right now. So the idea that actually bringing down house prices by the amount of a deep renovation to enable those who live in those houses to pay lower bills and to kickstart jobs markets locally in line with the Green Deal all sounds like a good thing. So I think that what I would say is that perhaps we're looking at this, perhaps the ambition that we're looking for or calling for is for policymakers to think outside the box. I mean, one of the things about energy efficiency, I think, is we've never I'm calling for these types of, should we say, slightly innovative or different approaches, because I think it's what's needed. Because if we just have more of the same, even if we turn up the dial, I just don't think it's going to work.
Yeah, more of the same I don't think is going to work, because that's what the second revision to EBPD and the EED was about, and more funding has come in, which is all great, and there's many more programs, but the IEA shows over the last 3-4 years energy efficiency investment has been going down, and so I think we do need new types of policies. That's what the climate emergency and what the renovation wave demands.
Okay, thank you. I think we're going to have to leave it there. Our time is up. I feel we could keep going. And I want to thank you all for your inputs. I think we covered a fair amount of ground, and I don't think I'm going to attempt a comprehensive summary. The message just now at the end that more of the same is not going to cut it, I think is very clear. There is a need for something different, and at least you on the panel here today suggest that mortgage portfolio standards is one example of that something different, which could make could bring about the kind of transformational change we need to see if we are to get on track to Paris. I thought, Murray, yeah, you pointed out energy efficiency investments have actually been going down, so there is a very real problem. And Sandra, you said when it comes to real impact on the balance sheet and on the ground, it is buildings that are key. So rather than more flashy things, we had various examples. I mean, which can make a difference. Moving out of coal and gas, buying a Tesla as opposed to doing a deep renovation, I think was a nice example too. Energy efficiency isn't flashy, but it can make a real difference on the ground. And I guess clearly we're not going to get to net zero without it. For banks, what you start off by saying, I mean, banks are committing to, expected to commit to net zero. Mortgages will be part of that. I take note too that, you know, mortgage portfolio standards are not the solution to 100% of mortgage portfolios and banks, as I think also became clear at the end. They are one potentially useful innovation. The idea of an EU Renovation Loan would sit alongside that as another potential useful innovation. I think, I come back to the last question. I mean, Paula's question over how this links to minimum emission performance standards. I think, your answer, Peter, was clear on that. The two need to be thought of together, and I think from what I understood from Paula for the Commission, that's their starting point. So if this is going to be part of their plans going forward, it has to fit into a logic of supporting those standards and enabling them to be met. Encouraging that, so the concept is innovative, but it's not entirely untested. We heard from Sandra. I mean, it exists at ING. We saw in Peter's presentation, ABN AMRO is also implementing an NPS. The UK, you said, Peter, is also thinking of introducing an NPS. So it's not an entirely untested idea that has never been considered by anyone before, which I think is encouraging. And finally, I think we had recommendations from everyone on what to watch out for, what, in Sandra's case, also prerequisites you would like to see before an NPS was made binding, for example, on banks. And I think always an emphasis on the one hand on just the granularity and hearing from you, Sandra, how the NPS works and just the level of information you need. Ideally, you need a carbon footprint per house. You need a lot of data for that. You need engagement with homeowners to ultimately make this happen. And then higher up, mortgages are one part of what banks do, and the engagement of stakeholders all the way from the actual building owner up through to the investors who own the banks in turn is probably going to be essential for this tool to make it and to make the difference it could make. I think, those are some of the thoughts I take away from today. Peter, do you want to leave us with some ideas or next steps on your side?
Actually, Sonia, I wanted to thank you because this has been a fantastic session. You've done a great job as moderator, and thank you for raising those important questions. Thank you to all of the panelists, Murray, Emilia, Sandra, Kieran. Thank you, Paula. I know we couldn't see you, but you've been there throughout, and I appreciate all of your engaging with this idea. We've recorded this. We're going to make the recording of this webinar available. We will continue our efforts to bring this idea into the COP, actually into COP26, where hopefully we can land it in a few of those conversations that I mentioned earlier on. And I welcome everybody to engage, online and through the standard social media feeds and directly with us through email and everything else, because I think this is the beginning of a conversation that has got legs, and I very much look forward to continuing to have it with you all and others. So thank you.
Thank you very much, everyone, for your time. See you soon. Let's keep talking.
Pleasure. Thank you. Bye.
Bye-bye.
Thank you. Bye-bye.
Thank you very much. Bye.